A splendid evening it is to viewers. Welcome to Equity News on EquityAxis, your area perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast from the Hampton studios. I'm Ibn Mabunda. Let's go. The Deputy Minister of Mines and Mining Development, Honorable Polat Kambamure, today encouraged chrome producers to engage in chrome beneficiation through the setting up of smelters across the country. He also said priority will be given to chrome producers by government in as much as has been given to gold producers. This he said during a chrome stakeholders consultative meeting held in the capital this afternoon. Let's have a look.
As you are aware, there was a ban that was lifted. In such, after the lifting of the ban, we've seen, significant improvement actually. Instead of exports, increasing, we've seen significant improvement locally. The companies evaluating, chrome to high carbon ferrochrome. Without taking much of your time, I want you to be as much open as possible so that you can hear all your concerns, and as government will respond and see how best we can attend.
The minister also highlighted the improved chrome output in the country following a ban lift recently. Let's have a look.
We've had cries, especially from the small-scale miners in chrome, that more focus is being given, to gold miners, yet the chrome small-scale miners are being neglected. We all love you, and will attend to you the same way. Although there have been some abnormalities, I want to promise you that the sectors that are being given to artisanal small-scale miners in gold, the same attention that we'll be giving you. As I said before, we've seen some smelters being constructed with companies like Afroshin, Zimasco, and other big companies, in the industry. And please, other players, we have not yet set up those smelters for beneficiation of chrome, ferrochrome. We need to do that.
TSL is seeking to extend its forex revenues, which currently stand at 20% of their revenues. This was expressed in a trading update by the Chief Operating Officer during an annual general meeting held in the capital this afternoon. Our EquityAxis team was on the ground. Let's listen.
Secondly, we've deployed a number of strategies to protect shareholder value and company value. Thirdly, we've been increasing the amount of foreign currency that we've been generating as a business. We've also stayed on top of pricing to the extent that it is possible. We've been adjusting our prices regularly, and all of this has been designed to make sure that we're able to replenish stocks that we sell. So that cash conversion cycle has also improved quite materially. And then as far as liquidity is concerned, we've been investing this in the business, so in additional assets or in additional stocks that are in direct pursuit of our defined strategy. And then when you look at the performance of our businesses, overall, the performance of our businesses has been satisfactory.
The group is looking to launch IT initiatives for all its business units as a means of reaching out to its clientele as well as improve on its efficiency. Again, let's have a look.
What we have done as part of the strategy is to introduce a new warehouse management system. We're quite excited about what this means. It's the first of its nature in this market, and it's allowing us to give full visibility to our customers and to be able to interact with them on a digital platform. That system went live on the 1st of April, and we're going to continue the rollout, which should all be complete by the end of this financial year. Our forklift volumes for the hiring side of the business are significantly up. That's because there was a much larger crop last year and the processing continued into this year. And our sales for forklifts are satisfactory. And in the customs clearance and freight forwarding business, we're pleased with its performance at this stage, and they've signed on a number of new clients, which has sort of made up for the
Listed sugar producer Hippo Valley issued a cautionary statement that it will revise its 31 March 2019 financials, resulting in a delay in the publication of its pending financial results. This follows a reporting scandal that hit its JSE-listed parent, Tonga Hewlett, as it emerged that its 2018 financials were overstated by over 2 billion rands, which has resulted in the resignation of its key executives. The Ministry of Lands, Agriculture, Water, Climate and Rural Resettlement says the World Bank is keen to assist government by paying compensation to former commercial farmers who lost land under the fast-track land reform exercise. A senior official in the ministry said the interest followed a mission undertaken by the World Bank that was impressed by the joint efforts of government and commercial farmers union in assessing what is owed to the farmers union. This concludes our evening news bulletin. Up next is a look at the news under the news review. Please stay tuned. Welcome back, viewers. With me on set is economist Tinashe Kaduo. Tinashe, good evening and welcome to the show.
My pleasure. Good evening, Eben.
Splendid. Now let's cut to the chase. Significant development. The Minister of Mines, Honorable Kabamre, says that, look, we would need to see crop producers getting into crop beneficiation so as to value add and actually increase our forex revenues. What is your perspective where that statement is concerned?
I think that's where we should drive all our production towards. If you look at selling the raw like unprocessed crop at the international market, it fetches around below $200 dollars per ton. But if you process it maybe into a high carbon ferrochrome, it fetches something around $947 per ton. Actually, that's a good good move. But if you look at as a nation, for us to say we are able to value add our chrome, actually looking at the state of economy currently, I think it's actually a huge task. You look at chrome processing; it requires a lot of electricity in terms of their production processes. And looking at what's happening right now, currently, I think it's actually something that is very difficult to implement. Then you also look at the chrome industry as well. It relies much on coal as well as an efficient rail system. If you look at the challenges in the sector, much of it is to do with these infrastructure bottlenecks. So if we happen to solve those issues, then we have reliable electricity as well as a reliable road as well as rail infrastructure. I think that will help in terms of speeding up the beneficiation projects. But of note, we have some of the companies that are already into chrome beneficiation, the likes of Zimasco. Yes, it went under judicial management some time ago because of those issues that were happening there, high debt issues and all those things. But there are also other players, some Chinese investments that are taking place there as well. I think they will help to beneficiate or to value add that chrome.
But really, looking at the stats, Zimbabwe has about 12% of the world's chrome reserves. But currently our national output is 3% for chrome and 5% for ferrochrome. What can we do to change that stat?
Yeah, like what I've been saying, yes, indeed, the natural resource we have as a nation. But the issue that we have is those infrastructure bottlenecks. We are lagging behind in terms of our peers. You look at South Africa, it has, it's another, chrome, producing jurisdiction here in Africa. If you look at it, it's benefiting much because it's closer, to the coast, and it uses its own ports to ferry that chrome to China, which is the world is largest consumer of chrome. So for us, we have to ferry that chrome all the way to Beira by road. And if you look at the port of Beira, how it is made up of, they were saying some time ago that Zimbabwe, for it to export as much chrome as they want, they have to construct their own chrome handling port at Beira. So those are some of those issues that are affecting the industry. So I think at the policy level, if the government invests much in key infrastructure, especially resuscitating the national railways of Zimbabwe, I think that will help a long way to improve our access to key ports, as well as our access to key markets.
Yesterday we discussed how the NRZ will spend $15 million on upgrading its fleet. How positive would be that move where the mining sector is concerned in Zimbabwe?
I think especially the chrome players, I think they are actually looking at NRZ resuscitation as a key development for them to get back into business. Some time ago, I think we had those statistics that were saying we actually have a lot of chrome that's already on the ground that is just waiting to be ferried to the markets. So it's not about just mining the chrome itself, but the chrome there is already mined, is there. But what's happening there is we don't have sufficient supporting infrastructure just to ferry it to the ports. So I think the 15 million development, if maybe it's invested in resuscitating those wagons to carry the goods rather than the passengers, I think it will help resuscitate the industry.
I realize. Now to move.
But of not, we shouldn't overlook the issues to do with ZESA. Because chrome relies much on electricity.
Of course.
In terms of handling, when you want to carry it, or maybe to load in those wagons, you use electricity, and processing it as well, you need electricity. Sometimes with these power outages, when that slag gets stuck, when we have got that power outages, then that slag gets stuck in those beneficiation plants. Sometimes it is costly to revamp that machinery. So I had some close up with my colleague who was expressing me how the whole process works. He was saying that it is actually cheaper to import a new plant when rather than trying to resuscitate a plant when the slag condenses or it gets stuck during the production process.
Okay, now very quickly let's talk about TSL. They're seeking to increase their export revenues. They're currently standing at about 15 to 20% of their produce, and they're looking at a couple of initiatives that could perhaps drive value on the international market. What is your comment where that is concerned?
If you look at how most of the companies are operating in Zimbabwe, the issue of forex is really topical. Much of the companies, they are saying if they are able to export, it's actually better in terms of having sufficient liquidity to smoothen their operations. What's causing these increased cost or some operational bottlenecks are those issues to do with foreign currency, especially when you have got a production process that requires a certain key raw material that is important. So you have seen so many companies trying to go that route to source by themselves the required forex to sustain their operations. Relying on the interbank market, I think the companies, they are now realizing that there is not much foreign currency that is being transacted through the official market. So the only way out is to source that foreign currency by yourself.
I realize. Well, thank you, Tinashe, for the perspectives. Thank you, viewers, for staying with us. Up next is a look at the stock markets. Please stay with us.
Good evening, ladies and gentlemen. Welcome to Markets Daily on EquityAxis. My name is Anis Chimbum. Joining me today is Respect, our chief analyst. Respect, good evening. How are you doing today?
I'm doing just good, and you, Anis?
I'm all right.
Sure.
Well, the market lit up a 7-day rally today, coming off 0.12% on the all-share index. Industrials index is down 0.22%. Now, as normally as we have seen in the past couple of weeks, the top 10 index majorly has the influence on the movement of the market on a specific day, with the top 10 index coming off 1%, resultant of a 7.36% drop in the Equinet, which is the largest counter on the stock exchange at the current moment. Mining's index, however, did dance to a different tune today, other than BNC's movement, but Rio Zim, which is the second counter within that index, that added about 10.15% to its share value, selling at 282.64 for that index. What's your take? Is this more profit taking?
Yeah, so just as we have mentioned over the past few days, there's been oscillations in the market. If you look at the trend in terms of these heavy caps, some of them, I mean, they have been volatile, but the pressure generally has been on the upside, and this has been mainly driven by other factors outside of the stock market. Mm-hmm. So I think it's bargain trading. It's definitely investors who are taking advantage of dips and runs in the market to take profits, and sometimes jump into those dips and capitalize on the sharp volatilities. But I think what's causing this sharp volatility is this move by investors to try to capitalize on the available opportunities on the stock market. And so it's resulting in huge gains within smaller or shorter periods, which other investors are choosing rather to cash in on. So we are seeing quite some rapid movements. So whenever you cash in, sometimes if you're a buyer, you wait for a dip, and then you buy back a counter. Like now, it's down 7% today, but it was up. It was up by 11% just a few days ago in a single session. So I think those fluctuations, somebody can take advantage of them and come out clean. But I think the general momentum, to me, it's still very much on the upside, and obviously the three heavies were down today, but I still see them recovering. And I think if the Econet script or the Econet shares are on the market right now, they might be a good buy, because if they went up 11% and lost 7 today, I think that the counter is bound to reset again in the coming days. But if you look at the general board, especially the other top 10 counters, most of them going up. 5 over 10 of the counters are trading in the positive. Only 2 Old Mutual and Nat Foods were stable. And I think there's been talk in the market about the parallel market having exceeded the Old Mutual implied rate as of today morning, running at just about 10.5 thereabout in terms of. But that analogy is also mistaken to say, is the run by the parallel market rate going to be sustainable, given that it has never gone beyond the Old Mutual implied rate? The Old Mutual implied rate is a function of 2 things. If the SA counter is falling, then we are likely to see a decline in the OMIR rate, in the Old Mutual implied rate. But if the if the Zimbabwe rate. Yes. So no, we are implying a rate out of the movements. So if the ZSE price goes down when Zim price is stable, it means the rate goes down. If the ZSE price goes up, whereas the Zim is going down, it widens the Old Mutual implied rate. So I think it's just about analogies which may not necessarily show us the direction over which our crisis is going. But we are in a full-blown crisis, and these movements, much of this board is green, which shows that there's momentum in the market.
Okay, Citco International did make another bold movement there, coming up 16.19%. I think I remember the last time it moved again, it was around about that same percentage movement. It actually has pushed its week to date up to about 30.45, making it the best performing counter in that top 10 index on that week to date basis. almost also on a month date. No, actually, Padenga would be better by just a couple of percentage points. But then I do remember the CE for the Citco Group did mention that the overall performance of the group was spared much to do with the Citco International Limited's performance in Botswana. Do you think that performance is going to be sustained? I mean, there has been a region-wide drought that has been spoken about within the SADC region, and also within the regions that they're actually trading in, one of which is Kenya. Where do you think is the drought is going to really affect them? Will they be majorly affected, or the production of the genetically modified seeds that they did mention is still going to try and cover that gap for them?
So for Citco International, much of the move or much of the growth in business is coming from organic growth. This is growth that's driven by existing operations, and the major shareholders on the Zimbabwean operation have also who are now also the Vilmarin guys, who are now also the major shareholders of the regional unit, have been able to capitalize the operation, and therefore they've managed to expand, especially from a capacity perspective. But in terms of demand, this has largely been hampered by macroeconomic challenges across Africa. In some of the key markets, the key dampener there has been the aspect of drought and also some shaky economic fundamentals. If you look, for example, in Zambia, they had suspended the input scheme, more of a presidential input scheme, and now they have restored it, and there's been macro volatilities which affected the price stability of the of seed. So that has been some of the challenges. If you look at also Kenya as well, had hit by the same effects as well. So I think it's about the long-term game. It's about the long run. But there are clear changes in the clear changes in terms of climate, and therefore there is now need to review what this means in terms of agriculture and the prospects of a business which is cyclical and which relies on the same climate that we're talking about. This is something that Citco need to look at clearly to really preserve viability of produce. Because if you look at it, suppose you are having yields of about 2 tons per hectare because of drought. Because of drought, you achieve 2 tons per hectare, but when there's good climate, you are able to achieve 10. It means viability is improved by the weather patterns. So they have to study the climate changes, its impact on production and productivity, and to see how they can remodel their business to take advantage of those changes, even educating the people or the target markets that they're playing into. But I think these are people who are in it for the long run. And the fact that they have separated the segments of the businesses between the Zim business and the regional, I think it gives them room to grow further on the African continent. And they do have got a clear, good relationship with one of the biggest agro companies in the world. And I think they will leverage on that technically.
Okay. Today's losses did trim on the weekly gains for the all-share index to settle at 9.26%, ahead of its prior week's performance of 200.22 points, while industrials index is up from 668.49 to 729.64, which is a 9.15% gap. The mining's index did extend on that gain to 13.73%, while the top 10 index has trimmed to 10.78%. Now, 15 counters were risers, 3 laggards, 20 counters traded, leaving 2 counters to be pretty much stable.
Yeah.
On that front.
That's a very telling statistic as well. I think we touched on it yesterday when we were trying to look at the depth of the current rally. Of course, today, the market came off, but if you look at it in terms of the number of counters which rose against those that came off, is just 3 against a number against 15, and that gives us a market breadth of 13 of 12 counters. I think that's a very strong statistic. but just that the counters that came off were heavy. So it shows you that there is still there's still a demand push factor on the market, which is seeing prices rise on a day-on-day basis. So there's still some good momentum. FBC there capping the market with a 20% gain. That's a very strong performance.
Yes.
Truworths, a retailer, coming up 19.31. We've got another bank as well, CBZ, registering 10% to clock 50 cents. This is a counter which has gained more than 50% on a year-to-date basis.
Yes,
And there's been a huge appetite for that counter ever since the company released its full year.
This is actually a clawback from prior sessions' performance, because yesterday it did come off by a couple of percentages.
Yeah, sure.
Yes.
Real obviously going up, but this is a counter which has not been as much active over the past few weeks, and it pushed the today's mining index.
Okay, could it be that the lack of traffic for that stock there could have much to do with the worry within investors as to whether the earnings for this coming year are going to be very much delightful, considering that they did pull back a little bit out of their gold mining operations, mainly because of how government has not been very favorable towards miners in terms of a forex retention rate?
So Rio has not been able to perform very well for quite some time, but there was some real interest a few years back, but in the current year it has not really generated that momentum, and that is mainly a function of poor performance, especially at some of its mines. So generally there has been some not so good performance at some of the mines and the overall group. So investors are still skeptical, but in a market where every counter is fully valued and you're looking for value, you just end up pushing your money into those counters, at least where you know that there's gold, which is real money, which is real USD, and you can get a value for it in the long run. So I think that's the strategy now. Investors just buying stocks for the sake of preserving value, other than for getting some real gains.
Okay, like you did mention, the parallel market has breached the 10 mark. It is almost similar according to our calculations. 10.5, yes, was a rate on the market today, but it was one of the high level bids there and ask prices. But then also on the low end, some people were still trading around about 9.75, 9.8, and 9.9. So we did settle at 10 today. The old mutual implied rate, today the local bourse was stable, but the Johannesburg Stock Exchange did come up, and the Interbank market has continued on its weakening trend, but just only coming up by about 0.38% from prior sessions performance.
Yeah, sure. So it's also another phenomena that we are quite grappled with as a nation, to say if we are realizing gains on the interbank which are so marginal, and yet we are finding some real jumps on the parallel market, then what's going to bring that reconciliation, and what does it mean for the economy? So there's a real consensus in the market that the rate is moving towards the 1:1 between the rand and but that's also some misplaced that's what traders are doing, but it doesn't make economic sense. Why? Because the value of any counter is based on the underlying fundamentals. It's not just basically about trying to match currency A and B. It's always about what fundamentals are behind a certain counter. Those fundamentals, as we have always said, this is basically fiscal consolidation, current account consolidation, and money supply management, and those are very key in stabilizing currency, and also even the reserves as well. If you have quite some reserves, you can always place them in the market and try to manage the exchange rate. And so we are barely bare in terms of having all those factors in place to try to stabilize the crash that I anticipated a few days ago, that we are definitely headed for a local currency crash.
Okay, thank you, Respect. Well, investors continue to run into stocks in the cool fashion that we mentioned earlier on in the year. Now, from the EquityAxis team and I, do not forget to like, follow, subscribe our YouTube, Twitter, and Facebook accounts at EquityAxis. Also, do visit our page www.equityaxis.net. Good evening.